Good evening. Thanks for joining us on What's Hot. I'm Shereen, Bhan. The top 5 that we're tracking for you this evening. Trade data for the month of June confirms the economic slowdown. Exports tanked 10% to $25 billion. Imports also see a 9% drop. 70% of packaged food items in India could be labelled red if the rules proposed by the food regulator get the green light. Worried about the fallout, FMCG companies plan to make a presentation to the food regulator. Finance Ministry, CBDT and SEBI discussed the impact of surcharge on foreign investors. Sources say there is no specific proposal on any relief yet. Add that the Revenue Department has reservations on a special carve-out as it believes it would lead to more complexity. The DHFL stock gets battered in trade after the company reveals documentation deficiencies, unbanked checks from loanees and unpaid intercorporate deposits. Also expresses doubts over its ability to function as a going concern unless banks and investors put in money. Massive slump in sales force auto majors to rethink their production plans. Ashok Leyland shuts down its Pantnagar plant for 9 working days. Tata Motors decides to observe block closure for 2 days. While the ongoing trade tensions and weak global demand have taken their toll on India's exports for the month of June, Commerce Ministry data shows merchandise exports have dropped 9% in June to just over $25 billion. Imports also down 10% in June, but the deficit remains above $15 billion, even though it's down 8%. Oil imports were down 13% in June to just over $11 billion, and ahead of the festive season, gold imports have seen a sharp spike of 13%. The Commerce Ministry blames the base impact and weak global trends for the drop in exports, but this data does confirm that the economy is in the grip of a slowdown. So both export as well as import data are down for the month of June. Joining us now is Pranab Sen, the former chief statistician. Mr. Sen, thanks very much, sir. So for the month of June, both imports as well as exports down by about 9%. What do you make of this, and what would you believe this tells us?
Well, as far as exports are concerned, our exports haven't been doing anything for a long time. So it goes up a little bit and then comes down a little bit. But it basically hangs around the annualized $350-360 billion level. And this is pretty much at par with that. But it's the downturn in imports that's really more worrying, because what it's saying in effect is that domestic demand, which we already know was weak, is weakening further. And, oil imports are down 13%. And what it means is that non-oil imports would be down probably about 6 or 7%. Now, that's quite a substantial drop on what was already a weak import picture. So the overall story that has been coming for the last 3 quarters seems to be continuing now. And the likelihood is going to continue at least for another couple of quarters.
Yes, on that issue of the imports, and you pointed out oil imports are down 13%, but I also want to talk a little bit about what we're seeing happen, for instance, with the sector that is a proxy for the economy in a sense, auto. And we've heard from companies like Ashok Leyland today, shutting production down for 9 days on continued weakness in demand. Now, one was expecting that the budget would have provided the trigger, at least in the near term, given some fillip to both exports as well as domestic demand. But in light of what we're seeing today and in light of what was announced in the budget, do you believe that we're going to see any significant uptick in the next few months?
No, essentially what is happening is that the party, which was going on since the post-demonetization period for the corporate sector in India, which is really the middle class and upper middle class in India, that party is coming to an end. And auto sales had actually reached levels which were really quite surprising. We are getting surprised at this 15-17% slowdown in auto sales. What should have surprised us was the 17-18% growth that had taken place the last couple of years. That was really quite surprising. So upper middle class incomes are taking the hit, and as far as the budget is concerned, there's nothing there for them.
Okay, well, you believe that we're going to see another couple of difficult quarters, and that is what the trade data also does seem to suggest this evening. Dr. Sen, always a pleasure. Appreciate you joining us here. Pranab Sen there, reacting to the numbers that have been released by the Commerce Ministry, a drop in both imports as well as exports. Well, this is what we were talking about. The slowdown in the auto sector is clear and present. Commercial vehicle maker Ashok Leyland has announced that its plant in Pantnagar will be shut from the 11th of July till the 24th due to weak consumer demand. CNBC-TV18 learns from sources that Tata Motors will also be shutting its plant for 2 days in July. Alicia Sachdev is here with more. Alicia, so Ashok Leyland announcing production cuts because of weak demand.
That is right, Shereen. In fact, a bunch of factors which has led to this weak rural consumer spending, a delayed and a weak monsoon, and also the impact of the increased axle load norms, which have all led to sales dropping to 12.27% in the month of June. Now, most manufacturers, because of that, are having to resort to production cuts to manage rising inventories. And the latest one out of all of these OEMs to announce no production days is actually Ashok Leyland, which has said that for a period of 9 days, starting tomorrow, that is July 16, it will not hold any production in its Pantnagar manufacturing facility in Uttarakhand. Additionally, we're also given to understand that the company will be halting production for about 4 to 5 days across its other plants as well. But Ashok Leyland is not alone in actually taking these production cuts. The second, the country's largest CV maker, Tata Motors, has also said that it will be stopping production in its Pantnagar facility for 2 days. That will be July 13th and July 22nd. The company has also said, however, that there are not going to be closures at any other facilities that they have. They do have 6 plants, remember, and they manufacture both passenger vehicles and commercial vehicles there. Tata Motors specifically had seen a decline of 27% in their passenger vehicle sales last month in June, and we are given to understand that there are plans to rationalize that production as well. And in a statement that they sent to us, that they said that the demand situation there is actually what is dictating their production schedules, and that for a few days of the month they are utilizing their no production days for plant maintenance activities as well. Also, the other important CV manufacturer that we know in the country is Volvo Eicher Commercial Vehicles. They are also cutting production in the commercial vehicle space, although they said that they are not going to shut down any of their plants in the month of July. Now, lastly, Mahindra & Mahindra had also told us in an earlier interview to CNBC-TV18 that while the company does not expect that there will be shutdowns to the extent of 5 to 6 days that they saw in the month of June, even in the case that they do have to undertake production cuts, they will not be as bad this time around.
All right, Alicia, appreciate you joining us with that. On to the market action of the day, a range-bound day of trade which saw the benchmark indices beat the Monday blues. However, the Nifty is still under 11,600 and the Sensex below 39,000. The broader markets underperformed the benchmarks, with the mid-cap ending close to 1% lower. Infosys was the star of the day. The stock rallied 7% after reporting a strong first quarter. Well, to the issue that's been bothering markets and foreign investors in particular, we learned from sources that the Finance Ministry, the Central Board of Direct Taxes and market regulator SEBI are all discussing the impact of surcharge levied on foreign portfolio investors. However, no relief measure has been proposed yet, and the Revenue Department has some reservations. Timsy Joypuria is here with more. Timsy, what are you picking up on the talks that are on within the DEA, SEBI and CBDT on the FPI surcharge issue?
Well, that's right. What we understand from sources right now is the fact that Department of Economic Affairs, CBDT and SEBI are discussing the impact of the surcharge on FPIs, which was announced in budget. Also, Revenue Department has certain reservations which it has discussed in these discussions. However, Revenue Department is very clear, and they've told the Department of Economic Affairs also that there are certain apprehensions when it comes to having a special carve-out for FPIs, because the category of individuals, HUFs and AOPs go together under several tax rules and laws in the Income Tax Act, and it will be a little difficult for the Revenue Department to have a carve-out. However, if they actually consider this proposal of having a carve-out, then government, to be precise Revenue Department, will also have to have a strict anti-abuse measure which would need to be followed, especially when it comes to surcharge on FPIs. So there there are currently talks going on between the stakeholders, be it Revenue Department, be it CBDT, be it DEA or SEBI. However, there is no proposal on relief to be given which has been discussed. As of now, there is no such proposal on the table, but it's just impact analysis that the government is doing, and they are just assessing few areas such as having a carve out, to which Revenue Department has raised apprehensions, and it is not in favor of having a carve out. Let's see what happens finally, whether government chooses amendments in the finance bill to announce a relief or whether government decides to leave it as it is. We'll keep you posted.
All right, Timsy, appreciate you joining us with that. Now, investors punished the debt-ridden DHFL stock after the crisis-hit mortgage lender reported a 2,200 crore rupee loss in the first quarter, but it was not the earnings alone that ruffled feathers. The notes to accounts indicate that bad loans could increase and points to various lapses in documentations, off loans, and questions the company's ability to even stay afloat. In a statement, DHFL believes it remains strong insolvent and is hopeful of a resolution without any haircut to lenders. Latha joins us now with more details on DHFL's troubles and if the company can dig itself out of the hole that it currently finds itself in. Latha.
Well, the numbers of about 2,200 crore losses for the fourth quarter and NPAs going from 0.96 to 2.74% is not what has disturbed the street. The 30% cut in the stock, or near 30%, is because of the notes to accounts, which is saying a few things. It says that the procedural lapses and the end-use question marks of some of its loans, which Cobra Post alleged, are still not entirely resolved because replies are expected from some of the borrowers with respect to the end use, and they have not been received. We don't have any idea of how much is the amount of loans involved. With respect to intercorporate deposits, some of them have been converted to loans. Some of them, about 4,000 crore, have yet to be paid, but the company is expecting it. There are lacunae in some documents, which one of the notes to accounts acknowledges, to the tune of about 20,000 crore. The company says that no adjustments are needed, but we have only the company's word for it. With respect to some other loans, about 16,000 crore of loans, they have got interest payment checks of 1,875 crore, but they didn't bank them, obviously because they were not sure it would be honored. Now, taking into account this 16,000 crore and all their other developer and SRA loans of 34,000 crore, they have written the value down as fair value to 31,000 crore, and that 3,000 crore odd has been provided for. That accounts for the loss, the company says. But all this has been signed by the company and not the auditor, which is why probably the markets are worried as to what will the auditors say about these numbers. As well, the company says that its ability to go on as a going concern depends on further asset monetization and more money coming in from banks and or investors. That line also could have worried investors. DHFL has clarified, saying that the management notes actually show our intent to be prudent and conservative, and they say that they have withstood a lot of pressure and remained solvent. They have paid back 41,800 crore since September 2018 when trouble began, and that they are working closely for a resolution with the stakeholders. This clarification has come from DHFL. From the bankers, we hear that they are going to hold a larger meeting with mutual funds and NCD holders as well, because if there is a haircut to be taken, all those who have provided credit may be asked to take it. The last meeting was also held with mutual funds, but only some mutual funds. Now maybe the larger body of those who hold debentures will be called. Expectation is that a deal will be finalized by July 25th, and the audited reports are expected to be submitted on July 19th.
All right. Thanks very much, Latha, for joining us with that. So we are expecting the audited results of DHFL to be put out before next Monday. That is the expectation. Now, the Interglobe stock continues to be under the pump, though the scrip did manage to end the day higher by about 2%. The promoter spat at the airline has intensified. Interglobe Group head Rahul Bhatia today said that the foundational structure of the airline protects it from turbulence in difficult times. Now, remember, this comes 2 days after Rakesh Gangwal, the other promoter, sought the Prime Minister's intervention while making it clear that he did not want to buy controlling stake in the airline or sell out? Sonia Shenoy joins us now with the latest. Sonia, the war of words continues. And Interglobe, of course, the stock has been facing volatility on account of it.
There has been a lot of mudslinging going on, and the latest in that is that the Bhatia Group's IGE has set the record straight. Rahul Bhatia says that Rakesh Gangwal limited his financial risks. In fact, in a letter he says, and I quote, "The Indigo's foundational structure protects the company from turbulence and difficult times. The IGE Group is the one that underwrote the financial risk of Indigo." Remember, this is Mr. Bhatia sort of getting back at the allegations that were made by the Rakesh Gangwal Group. The IGE Group says that IGE played the most significant role in nurturing Indigo to what it is today. Rakesh Gangwal was completely missing in action during the turbulent period of a fledgling airline, and Kapil Bhatia and Rahul Bhatia extended personal loans to Indigo for diverse financing needs. So basically, they're trying to say that at the insistence of Mr. Gangwal, it was taken public in 2015, but a lot of the financial burden was borne by IGE itself. Well, because of all that to and fro, the stock was very volatile today. It started off with a cut, but now it's recovered just a tad bit.
To enable consumers to make informed choices, the food safety regulator has come out with draft labelling norms a few days ago. These rules make it clear that packaged foods must have nutritional information on the front of the pack, and food products with high sugar or fat should be colour-coded. FMCG companies are not happy about these rules, and some industry sources say nearly 70% of packaged food products could be labelled red if the draft rules are implemented. Let's go to Priya Shetna. She joins us with what the new rules propose and their potential impact on companies and consumers. Priya.
Well, 10 days ago, the FSSAI issued draft labelling regulations, which essentially said that companies must declare nutritional information on the front of the pack, and also the foods which are high in fat, sugar as well as salt will have to be coded red or will fall under the red category, and that will have to be disclosed by the companies. Now, this essentially means that close to 70% of the packaged foods will fall under this category is what our sources tell us, but that's really the big cause of contention, and that's the reason why companies, FMCG companies, are very unhappy as far as these draft regulations are concerned. We understand from sources that they're all set to make a joint representation to the FSSAI on this issue. Now, what is really the impact of these regulations? Companies would have to change their product formulations for existing products as well as re-engineer future products to avoid being in this red category. And also the discrimination between packaged foods as well as fresh foods which have the same fats, sugar as well as salt is another cause of concern for the companies going forward. But as far as the main bone of contention is concerned, is the basis of the nutrient thresholds that the companies will have to adhere to, and those have been prescribed by the FSSAI in adherence with global standards. But are they applicable to the Indian dietary pattern is something that companies are still debating upon. But of course, there are a series of nutrients that need to be disclosed on the top of the pack, and these include calories, saturated fat, added sugar, trans fat, as well as the sodium per serve. Now, on all these suggestions, we really reached out to the food regulator, and what the FSSAI really told us is that consumers must make informed choices, and that's the reason these draft regulations are being proposed. They're trying to address concerns of companies on these issues, and we'll get back to them, depending on what kind of feedback they receive from the industry. We reached out to the top industry players as well. HUL said that, well, these changes are progressive, but there is need for some flexibility to encourage product differentiation. And Nestle India also said that while these regulations are still in the draft stage, they are placing high priority on nutritional information, and at this point in time, Nestle is already having some sort of front labeling as far as some of their products are concerned. It's a space that we will continue to wait and watch for. Depending on the feedback that companies give the FSSAI over the next 30 days, there will perhaps be some consultative process that will go forward, going ahead.
All right, Priya, many thanks for joining us. Now, the latest from the Bhushan Power and Steel case, the National Company Law Tribunal, or the NCLT, has directed that the forensic audit report of the company be shared with JSW Steel. Remember, JSW Steel was the highest bidder for Bhushan Power with its 19,700 crore rupee resolution plan. Ashmit joins us now with the details of today's development. Ashmit, does this mean that JSW Steel may be developing cold feet given the new problems that Bhushan finds itself in?
Well, are they developing coalfield? That's a question that they will have to answer. JSW will have to come out and answer. But there is definitely some cause of concern that we can say with some degree of certainty. Let's understand the perspective as far as today's developments are concerned. Keep in mind that it was in the month of April that NCLT had reserved its judgment with respect to JSW Steel's bid for 19,700 crore rupees for Bhushan Power and Steel. It's been pending for nearly 3 months now. And it is in this interim period that there has been an interesting development. In fact, happened very recently. Earlier in the month of July, we had PNB come out on July 6th to be specific, whereby PNB admitted that they had conducted a forensic audit, and that audit revealed that in fact there had been bank fraud, that as much as 3,800 crore rupees had been siphoned off by Bhushan Power and Steel. Subsequently, on July 13th, which is more recently, Allahabad Bank also came out and they said that we've done a forensic audit as well, and our auditors are telling us that as much as 1,800 crore rupees had been siphoned off by Bhushan Power and Steel. And it is in this perspective that today's petition of JSW Steel needs to be seen. JSW Steel had moved the NCLT, whereby essentially they were seeking copies of these very forensic audits. Now, what's interesting is that while they were seeking copies, the lenders were also present in court today. They said that they'd be more than happy to allow these copies of forensic audits to be served upon JSW Steel. And they added in lighter vein that as they would provide the copies as long as JSW Steel is not backing out. And to that, JSW Council responded by saying that they have no plans to back out so far. The operative word there being so far. So interestingly, as of right now, NCLT has allowed for copies of these forensic audit reports to be made available to JSW Steel, but certainly a cause of concern there for JSW Steel and its bid of 19,700 crores for Bhushan Power and Steel.
Oh, absolutely, and a cause of concern there for bankers also. Ashmit, thanks very much for joining us with that. But time for us to wrap up this edition of What's Hot. Thanks very much for watching. Do stay tuned to CNBC-TV18. We'll bring you the action from Dalal Street. Indian equity started on a relatively positive note. Nifty and Sensex ended up higher by about 0.4%. Markets Today Talkback takes the action forward.